Is that live already?
Hello.
Hello. Hi everyone. Okay. Hi everyone. Can everybody hear us? If you can, please. Yeah. Yeah, it's on. It's on. It's okay. Yep. Okay. Same deal, guys. If you can hear us, please help us. Drop a message. Just say good to go. Hello. Hi everyone. Yeah, so that we know that the audio, everything checks out lah. Okay. Right. Audio, everything okay, huh? Okay, can. Let us begin. Okay. We do this.
Yes.
Okay. Go to the slides. Yeah. Okay.
Okay. So you guys can all hear, yeah?
I think we can proceed. Yeah.
Okay, so today we will be doing the last one of our location map. So today we'll be talking about the north. And yeah, let's see. So before we start talking about north, as usual, let's talk about what happened in the news in the last 2 weeks. And actually, the biggest news in the last 2 weeks is the land sales that were done on 30th October. So 2 weeks ago in our episode of the East, we talked about the GLS land sale at the Tanah Merah site. So this site actually concluded with 15 bids from various developers, and this was a really exciting piece of news for us because with the winning bid at $930 per square feet per plot ratio, the expected launch price, according to the newspaper, will be around 1.7 to 1,800 per square feet. And the other land that was being sold was the Yishun Avenue 9 EC site, and that one had 7 bids, with the winning bid being 576 PSF per plot ratio, which they are expecting to translate to about 1,100 per square feet at launch. So regarding the Yishun EC site, that one we'll be talking about in greater detail later because coincidentally it falls within our location map area of the north that we'll be talking today. So all these info are in the newspapers. We have also put it up on our Facebook page. So if you want to read them in greater detail, go ahead. So what we want to share with our viewers is how to make sense of all this information, right? And how you can use it to your advantage.
Yep. So over to the next slide. Okay. So actually we have predicted that this was, for those of you who have been listening to us, we have predicted that this was going to happen quite a while back, right? So what these charts talk about is how decreasing developer inventory actually kick-started the market bull run the last time around. If you follow my mouse, right, you notice how the inventory dipped below 20,000, and that corresponded to the start of the en bloc cycle. Okay, so for those of you who are joining us for the first time, so this chart is done by Hutton's Research. We are not going to take credit for creating this chart. It charts out the property price index movement against developer existing inventory. Alright, so it's the supply chart right? In other words, okay. So how did the last cycle get triggered, right? To make things easy to understand. So number one, right? Unsold inventory depletes. Okay. Number two, what happens? Then the developers will come out to start buying land to replenish their land bank, and they did this through the en blocs, right? First. And then when the government noticed what was happening, they then released more land in terms of the GLS to meet the demand, right? Then number three, what happened? the buyers start to take notice on the new land bid prices, right, driving up the price index, and then they start to kanchong lah. Then they start to take action, and as they realize also that the supply is getting lesser and lesser, because the old supply would always be cheaper than the newer supply, and the buyers will all flock to the old supply, right? So then number 4, right, stage 4, when everyone realizes that the current supply almost going to finish already, then everybody start rushing, and that starts to lead to a bull run, right? And when there's a bull run, right, sellers market, what happens? Then that is stage 5 already. Sellers get greedy, developers get greedy, they start charging higher prices, and that is why you see a laggard effect from when the prices move upwards to when the developers start to move into the market to start buying up land and en bloc. Okay, so we have always said the supply, the unsold inventory, these charts are much easier to see and much easier to help you gauge the market because they are a lot more predictable. Okay, so much for the news, right? Let's move on to the topic at hand. Okay, another update. I forgot about that slide. So in this chart, right, it was done earlier this year when unsold inventory was still at 27,000. The most updated data you see circled in red, unsold inventory including ECs today is 18,400, right? So it dips below that arbitrary trigger point that the first chart was trying to show. Okay, so the north, right? Any Game of Thrones fans out there? The north, just like the Game of Thrones, is sort of a forgotten area to a lot of us. Right? Out of the previous 3 areas, they don't get as much attention lah. But that doesn't mean there's nothing to talk about. Today we have picked up a lot of interesting case studies, a lot of opportunities actually to share with our listeners. So let's get started.
So as usual, we will start first by looking at what URA has planned for the north. And if you guys have been following us, you see that this is a trend. We always look at what URA has planned. So under urban transformation, which are the large-scale transformations that are done by the government, we have one transformation that seems to be taking quite a while to happen, which is the Woodlands transformation. So this graphic actually shows us what URA has planned for the north, with the main focus being around the Woodlands MRT area and around the future RTS link, which is the link, the train link to JB. So around these 2 areas, we see a lot of residential and commercial sites being planned for. But I think the biggest question that all of us have here is that when this RTS link will be built, because we need that to get started before we can build everything else around it, right? And with Malaysian politics being how it is and so messy, we don't know how long that will take. So while the plans do look very exciting, we have the mixed-use developments around the MRT, for example, and you know, lots of like commercial being planned. I think the trouble is that with most urban transformation, right, it really takes a while for things to change and for prices to catch up in the area. And so while there are not many opportunities right now at the moment to jump in the Woodlands area, there is one exception, which is Wood Square Commercial, which is near the MRT. Okay, so that one is being developed by Far East, and if you have a really, really long holding period, this is something that maybe you can consider, because Far East is keeping one entire block for their own, and I guess this gives investors a lot of confidence, because if Far East didn't want to keep one whole block and sell everything, then maybe you would be a bit worried lah. But they have faith, so they're keeping one whole block. Yeah, but other than that, on the residential side, there's really nothing much that we can look at the moment.
Yep. So on to more immediate opportunities, more immediate plans, right? For housing in the north. Okay. So we pulled this out from the URA website. I circled the areas that have more housing being planned. You can see they have indicated Canberra as a site that they look to develop. Yishun, okay. But what is interesting, especially for those of you who stay in the north, if you look at the area near Khatib MRT, so that is where, now we have the Orchard Life seafood. So those of you who go there for the lobster porridge, right? That area now, it's a bit of like a farm / agriculture place. That has been changed to residential purposes, right, as indicated here. Another big area is near Springleaf. So this plot currently it's under MINDEF, but that has also been changed to housing. Okay. That also has been changed to housing lah. So even though, right, over in the north currently there's not that many, it doesn't rank as high as Sengkang, Punggol, Tampines in terms of the units that's hitting its MOP. With what is being planned, as shown in the URA master plan, we expect the number of BTOs in that area to come up significantly in the future, which will be good for everybody that is already currently investing in that area.
Yeah. So the next thing that we wanted to talk about was about the transport transformation for the north. So one reason why the north has been overlooked was because of the lack of the transport infrastructure. Every time people say it's very hard to get to Woodlands or like Yishun. And that is going to change quite significantly with the Thomson East Coast Line expected to open next year. So we see pretty good upside potential for properties in those areas, and a tiny hint here, especially those that are near good schools. So if you want to have a comparison of how properties will perform when a new MRT is up, we can take a look at the effect of the prices when the MRT came up for the areas of Hillview and Beauty World, which experienced the downtown line MRT that is pretty new and pretty recent. So those areas are actually pretty similar to what we have on our north side over here at Springleaf, Lentor, Mayflower, Upper Thomson, Caldecott, because these two areas have similar characteristics in that there are quite a fair bit of landed and private property in that area. So that's good because upgraders will like the exclusivity. There is also wealth in the area, in the old wealth in terms of the landed property owners and the private property owners. The parents may help their kids, purchase properties nearby. So if you actually look closely in the map, you notice the north-south line over here, grey line, going all the way up and making a U-turn down on the other side. And then the downtown line coming here. And then we have the Thomson East Coast line coming here. So you realize that Thomson East Coast line and the downtown line are actually like kind of parallel to the north-south line, but serving the more inner circle rather than the outside. So that's going to help a lot with the transportation in the area.
Right. Next up, land sales. Okay. So there's a couple of things we want to talk about with regards to the land sales, right? So first of which would be the confirmed land sales. So these plots would definitely be up for sale. So this plot is at Ang Mo Kio Avenue 1. So for those of you who know are familiar with the area, right, it's beside this very unique, there's only that one block, the circular HDBs the one that look like a stack of coins. Yeah, so it's around there. So even though it's not terribly near the MRT for now, right, it's perhaps within a 10 minutes walk to the future Mayflower MRT . But what I'm really interested to see for this site is the number of bids that's going to come in, right? So this is something that we will be monitoring very closely together with all of you over the upcoming few months really to see what's the trigger point. Because it's a relatively small site, 370 units, it will be a very affordable quantum for a lot of developers. So we expect the number of bids to be high. So it'll be, if the bids really do come up to be quite high, it's another indicator that, you know, the markets will be on the uptrend lah. So personally, I feel this plot will represent a good first mover advantage to the transformation that this Thomson East Coast line will bring to the area lah. Right, so let's wait and see.
Yeah, so then the next plot will be at Lentor. So we're starting to see a trend here. They are all along the Thomson East Coast line, right? So the site at Lentor is actually a reserve site, and it has just been triggered for tender, and the tender will be up in December 2020. So yeah, let's see. The last one would be the one at Woodlands. So this one is a white site, and it's currently a reserve site. It's right beside Woodlands MRT. So being a white site, you estimate a mix of residential and commercial, and being connected to the MRT, you know, the whole integrated integrated development. So we know we don't really give Woodlands much credit because of how long it's taking to realize the transformation, but this land plot would be quite exciting because, for one, it will offer the first residential integrated mixed-use development in the area, or even, for matter of fact, the first private property in quite a distance from Woodlands MRT. So you'll enjoy the, you know, how do you put it? It would be a first mover advantage, and people who buy into here will be able to command certain pricing in the future for the resale market, because supply only got that one side. Yeah, so it's not yet triggered for sale. So again, let's wait and see what happens. Yeah.
So, but okay, with regards to land sales, right, we come back to what we were talking about earlier on, right? The Yishun land sale site. So this is the breakdown estimated break even of $976 per square feet per plot ratio.
Yeah, this one's the EC that was closed earlier this week.
Yep, I think everybody was very focused about the Tanah Merah one, right? But EC one still received 7 bids, right? So at break even of 976, they should launch, right, about 1,100 PSF. But what we want to talk about, right, what we can take away from this, right, I want to share is some examples, okay? So EC has always formed the baseline price for where private properties are headed to. Example, right, Houseview that is located in Sengkang, okay, was launched at approximately 700 PSF in 2011. H2O Residences, also in Sengkang, right, was launched at 950 PSF approximately in 2011. So that's 35% higher than what Houseview was launched at. But yet, right, H2O Residences, the first movers, still managed to yield a very decent profit, average about $100,000 in profit. So what can we, you know, deduce, right, or draw from this past example is that with ECs launching at, you know, 1,100 per square feet, right, in the near future, right, land that has already been tendered, there's a lot of opportunities to purchase the current stock of condos at, you know, 1,004, 1,005 PSF. All these represent actually really safe entry points. Take for example, Jadescape, right? For those of you who know, look at the break-even price. It's really close to the EC break-even price. Treasure at Tampines, right? Also very, very close, right? Penrose, also really, really close. But of course, this is their break-even lah. You have to do your own research to measure out what's the difference, because they are not exactly apple to apple in the same location as well. Like Penrose is RCR, Jadescape is in the RCR as well. Yep. So just a hint, right? What can we draw out from the recent land bids for the EC side?
Okay, so now we go to our case study. Today's case study, we will be comparing North Park versus Wisteria versus Symphony Suites and versus 9 Residences. So we have pointed all of them out there on the map, and you realize that they are all pretty much in a very similar location. And if you look at the dates, they are all also launched in a very similar time frame and were completed in a similar time frame also. So only with the exception of 9 Residences, which is slightly older, about 2 years older. So it's going to be quite an interesting case study for all these 4 developments because they are all actually pretty different. North Park is an integrated development with a shopping mall and bus interchange linked to the MRT, and surprisingly, it is the largest development out of the 4. Symphony Suites comes in second in terms of size with about 660 units. Full facility condo, but it's not so near the MRT. It's about an 18-minute bus ride or 1.5 km away. So you have Wisteria and 9 Residences, which are similarly also further away from the MRT. But Wisteria and 9 Residences, they are both quite small. They are both under 250 units. And they are also both mixed-use developments, meaning there are commercial shops below and the residences are on top. So in that sense, similar to North Park, but because of the size. Okay, so let's have a vote. Okay, if you guys were to buy one of these 4, which one will you buy? If you will buy North Park, please put 1. Symphony, put 2. Wisteria, put 3. And 9 Residence, put 4.
So those of you who are inside, right, let us know what will you buy, because North Park, we've pardon the alignment, is a bit off. But okay, North Park was launched 1300 plus PSF, 9 Residence 1001, Wisteria 1085, Symphony Suites 1047. But you know, we have also drawn out their corresponding locations on the map. Symphony Suites is about a 18-minute walk. 18 minutes, a 1.8 km walk away from the MRT. It's also about a 6 bus stops right away from the MRT lah, right? So let us know what you guys think. Which one would you all buy? Okay.
Yeah, but let's compare how they perform in the resale market.
Yeah. So North Park, right? It was launched at 1346 PSF. Today, they're averaging about 1,500 per square feet. That's a 16% increment. Okay. And their owners have averaged about $225,000 in profit at a 4.7% per annum gain. Right. So that's ranked number 1 in terms of profits. Symphony Suites, you all can see from 1047 up to 1126, 7.5% price increment, 70k average profits. All right. So the bracket is the number of transactions. Okay, you can see North Park, it has 32, Symphony Suites have 12, 2.3%. Right. So I won't point out every single one. Just so that everybody can take a look at it. The Wisteria, even though the percentage is quite high at 12.6%, we do want to highlight that is only based off 2 transactions. Right?
So not sure whether it's anomaly or the trend will continue, because two transactions doesn't really give you a lot of data.
Mm-hmm. Okay, but we will go into this in greater detail on the next point. 9 Residences, it's negative, right? And they have averaged out to about $16,000 profits lah. Okay, next point, right? So what can we conclude from all of this?
So
yeah, okay, so you can also see that the profits, right, I brought out the North Park profits lah, really good. So it averaged out into 200 plus thousand. But what I want to draw your attention to are the larger units. Okay, the larger units, right? Understandably yield higher profits. But let's take a look at the quantum with which they were transacted at. So this is something that is really quite unexpected, especially for an area like Yishun, of not to put Yishun down or anything, but like 1.9 million 3-4 bedders in Yishun is something that I don't think a lot of us would have expected. So both of us are going to admit that at the start, when it first launched, we also had our doubts, right? But it has surprised both of us, which is why we are taking that effort to really go and look into it and then to understand, why has it outperformed the rest of the properties, right? So these are some of the conclusions that we draw.
Yeah, so first one is that size matter. And when we say size, we are talking about the size of the development, not just the size of the unit. So of course, if you get a bigger size unit, you make more because your square area is larger, right? But you see 9 residences performing so badly, and we think that's mainly due to the number of units there. There's just not enough units to generate enough interest in the project, and also for enough transactions to take place and then push up the valuations, because 9 residences only had like less than 200 units in total, so it's pretty low. Wistaria's numbers look quite okay for now, but we suspect that besides the transactions that have happened, right, the rest of the owners may be struggling to sell, because the number of units, if you check on Property Guru, is pretty high. They only have about 216 units, if I'm not wrong, but the number of units for sale is 70 units, and that represents about 30%, of the development being put out on sale. And yeah, that's with just 200 units in total. So 9 residences also facing the same issue with 57 units for sale, and that's also about 30% of the whole development. So when you compare this to North Park and Symphony Suites, you realize that there's a lower percentage of units being put up. Maybe people like staying in larger developments also because of the facilities. North Park has 125 units for sale. So while that number looks larger compared to 9 residences and Wisteria, you have to compare in terms of percentage, right? So percentage-wise, North Park at 125 units is only about 13.5%. Symphony Suites with 80 units is only at about 12% of the whole development. So this is the first time we are actually looking into this perimeter to look at a property to see whether there is a strong correlation to the profits. And our favorite High Park residences, right? Also a large development, 1,350 units, performing extremely well in terms of profit. They also have quite a large number of units for sale, 125, but that represents only just 8% of the entire development. Yeah, so with minimum unit size coming into the new plots, there is a chance that us experiencing this kind of large development, they will become rarer in the future. The GLS sites nowadays are all averaging about only 300 to 400 units. So we think it's quite, there is a potential for us to go into these kind of larger developments, 600 and above.
Yeah, because some of the common objections people may have is that, the development so big, next time will it be hard to sell? So, which is why we really went to look into great detail to pull out this perimeter basically measuring the number of units for sale to the number of units available, and then how does it correlate to the profits, right? So again, reinforcing the fact that larger developments tend to perform better. Okay, yeah, right. So point number 2 is the benefits of a lack of competition. So if you for those of you who stay in the north, right, you take the MRT down, there's not much competition in terms of an integrated development in the north. I think you only have North Park, right? So, which is why anybody north of Bishan, actually from Orchard out, right, don't have integrated development already. You only have North Park to choose from. So demand, supply, right? Okay. And point number 3, right, which was lead on from my previous slide, right, which is the increased budget of HDB upgraders. In North Park, right, 67% of purchases are from HDBs, right? 88% Singaporeans. So Singaporeans HDB upgraders with willing to pay $1.9 million to stay in an integrated development in Yishun. Quite an eye-opener for everybody, but it's something really worth considering, really worth thinking about, okay? The budgets really are coming up. Another point, right, which is the surprisingly good rentals for the OCR. So while obviously North Park performs well at $3.60 per square feet per month, right? The other 3 condos actually don't perform that badly in terms of percentage rental yield. North Park, because it's more expensive, average out to slightly under 3%, 2.8%, but the rest of them can yield above 3%. Another number that we want to look at is the rental volume. I put this out on a 2-year horizon, from the start of 19 to today. So North Park, understandably, more, because it's a larger development. Also, you get quite a fair bit of investors there. But you see, even there are people that are buying OCR properties and not near the MRT for investment.
For your example, your Symphony Suites.
Yeah, and because people will ask who will rent from those areas, who will rent in those areas, people will still rent because it's cheap. Yeah, because it's cheap. So it's something worth thinking about, right? Investments in the OCR. So we will end off with some nuggets of information. What are the opportunities in the north, right? So what we see, right, there's a lack of newer condos in the north. So the last batch really is the batch that we were sharing with you, right? This North Park Residences, Symphony Suites, Wisteria. The next group that will come online available for sale will be the ECs, your Criterion, your Visionaire, all those. Then after that will be these 2 condos that will be coming up near Canberra MRT that should launch around 1,004-1,005 BSF already. So those plots were bidded earlier this year in March. Okay, so with the large number of BTOs coming up in your Springleaf your Khatib Canberra, Lentor, Yishun, we see good potential, right, in these newer condos. Okay, continuing on to point 2, right, ECs hitting their MOP. So congratulations to the first time buyers. But even if it comes up to the resale market, we feel that is really something still worth considering if they're out at about 1,000 to 1,100 PSF point, because of the sheer support from HDB upgraders in that area and that lack of supply.
If they're really going to be building so many BTOs, then you have no worry in terms of resale in the future.
Right. Last 2 more tilted towards private, right? Private, those looking to buy private. Properties surrounding the Thomson East Coast Line stations, right? Existing properties, if they are freehold, and then they are going to be within a close distance to the MRT, larger land plots, something worth considering. Take, like we repeat again, take reference to what is those that benefited from the Hillview, Hume, Beauty World MRTs Last point, landed properties. Okay, so it is quite a forgotten area, but you see your Casuarina there, right? You see your Sembawang there, Seletar that side. They have really affordable landed properties. If you are seeing, right, you see 3-bedroom condos going at 1.9 million, you'll be surprised to find pretty good deals over at the Thomson upwards, right? Landed properties at slightly over 2 million. So those properties, right, 2 to 2.5 million
quite a
offer
sweet spot range.
really sweet spot range, because they will eventually catch up to the condo prices. So something worth looking out for, 2 million, 2.5 million, doesn't matter if it's an inter-terrace, right? So the next episode, right? So after learning,
We got quite excited when we saw North Park.
yep,
Yeah.
when we saw North Park, right? So we're going to dive into it in greater detail. We have dedicated one whole Facebook Live for that, integrated developments, right? So while they're expensive, right?
Are they worth it?
Are they worth it, right?
Yeah.
Both from a owner-occupier perspective and also from an investor perspective. So do join us 2 weeks from now, right? Same time for that episode, right?
Yeah.
So that's about it. On to the Q&A session. Han Bin is looking HMU.
Hit me up.
Oh, okay. Yeah, so it's in the east lah. Can. I will text you. But you remember to watch the east side episode. Yeah. But yeah, I will text you after this. Anyone have questions, right? I know north side, not many people look into it, but you know,
Maybe that's why today fewer people.
yeah, maybe that's why today fewer people. I think integrated development maybe got more people want to hear.
Yeah.
So okay, thank you guys for joining us. We'll see you 2 weeks from today for the integrated development episode. Right. Bye bye.
Bye.